how I plan to retire by the age of 46. Hello future investors and welcome back to another weekly episode. I am really excited to tell you about how I plan to retire at 46 years old. That's just under 20 years. I'm now 27 and I've got a pretty efficient retirement goal and plan and future investment, excuse the pun, goal prepared for my future to really better my financial wealth. Now I want to start by saying this video is not scripted, it's not planned. I've actually just got home from my day job and I'm loving filming content for you guys, especially right now. It's I'm really enjoying it. So I just wanted to say that this video is off the cuff and I'm going to be trying to come up with the reasons off the top of my head. And I figured it would be more natural so you guys can get a real honest perspective of how I plan to achieve this goal. So first of all, thank you all for giving me some names towards my new Future Investments mascot and precious metal protector. I'm loving loads of them. Keep them coming because there's still more that I want to see. Now on to how I'm planning to retire at 46. So my plan has always been ever changing, to be fair. Really my main investment intelligence started at around 25 years old, maybe just after that, maybe more 26. But it's become aware to me the ways you can actually become financially successful, and it doesn't have to be by inheriting wealth. It doesn't have to be by doing illegal things. It can all be done by board and by the legal processes. You've just got to know how to do it and be clever about it. So let's start. Well, my current retirement plan, as I said, is to retire between 46 and 50 maximum, but 46 would be 20 years from when I really started planning this. So currently I earn a wage from my full-time job. I earn revenue from YouTube. I earn revenue from a bit of private work. And I try and hustle a bit in the background as well, selling some bits, buying and selling. But that's very small time. But I am a massive believer of all of the small bits add up to a big bit. Look after the pennies and the pounds look after themselves. So I'm always trying to hustle and get those passive incomes, or not even just passive incomes, other forms of money coming in. Passive income, as we know, is a way of consistently bringing the same amount of money in or more each month with less and less work. So yeah, my plan really is to retire in the next 20 years by doing these few things. Now, first of all, I am saving like a madman. I am sacrificing a few things that I would like to buy so I can actually afford to save quite a substantial amount of money per month, per year. Now, I've actually worked out that I can averagely save just below £30,000 every 2 years. Now that is saving the money without actually hampering my lifestyle too much. I can still go out and have some fun, have some dinners, have a good work life and invest in life balance, but also while saving a lot of money at the same time. So I've roughly worked out that every 2 years I should be able to save just under £30,000. Now, you might think, well, how are you going to retire at 46? That doesn't sound like a particularly quick way to accumulate large amounts of wealth, especially passive income in 20 years. Well, this is where compound interest comes in, and I'm not just talking about compound interest like you might get in an index fund like the S&P 500. I'm talking about compound interest through work and reward, through more income bringing more income. And Robert Kiyosaki once said, every pound is a pound working for you. It's a worker in your business. So the more money you have, the easier it becomes. And they do say that money goes to money. So you're going to see how, shortly through my explanation, how I really plan to expand my wealth growing as the time goes on. So I'm a big believer in the fact that starting off, it's the hardest thing to do. Taking that first step, saving that first 30 grand is the hardest point. But what happens is when you buy your first buy-to-let, which I plan to do at the beginning of 2025, so we're looking at around 16 months or so off the top of my head, I'm going to have an interest-only mortgage on a rental income where I'll be renting that out and getting a yield per month off of that property. And I'm only going to be paying the interest, so I will hopefully be making more money than if it was on a repayment mortgage. Now that will add towards my income, my passive income, Not only have you got to include my wages, which go up every year from pay deals, you've got YouTube revenue, which is increasing month by month. So I'm expecting every 2 years it's going to be substantially more than it was the previous 2 years. And of course, my private work and the property. So the hardest point I genuinely believe in this period of trying to retire early is the first couple of years. Buying that first rental property and getting those other streams of income coming in a bit higher, such as YouTube. But once those incomes start coming in, it's going to become quicker for me to accumulate, for example, 30 grand. So as I said, every 2 years or so, I can save around £30,000. But as the years go on, that time frame is going to get lower and shorter and shorter. So that means I'll be able to save 30 grand every 18 months. And then the next 2 years, every 15 months. And then you get the drift. So the more money you make, the quicker that money comes back. So the actual start of my plan to retire early is the slowest point. But as I move on through the years, it's going to get quicker and quicker and quicker, building that wealth up as hopefully a passive income. So the hardest point is now, but I really see that in the long-term period, as time goes on, I'm really going to be getting quicker with that wealth, because the more money and revenue and passive income I have coming in, the quicker I can accumulate the money for the next property. Now, of course, I will be buying precious metals and such as silver and gold bullion in between these intervals, but my real focus is on property, buy-to-let properties on an interest-only mortgage, because I see that as the real money maker to get that passive income. Now, some of you might be saying, well, if you're doing it on an interest only, you're never going to pay off your mortgage. Well, I'm banking on the fact that property prices always tend to go up in value. And as you will know, I'm a long-term investor, and hopefully most of my investments are low risk. I plan that the property values go up enough so that I carry enough equity in the property that I can eventually pay it off with a mortgage, and then maybe you can even look at refinancing, getting another mortgage and pulling out more money. So I'm just going off of the basis of me saving cash every single month from passive incomes and work and revenue. But you could also look at the possibilities of buying your first buy-to-let property on an interest-only mortgage, maybe holding it for 5 years and then pulling some money out of that, getting a remortgage or a refinance. Then you've instantly got another 30 grand, for example. Obviously, figures vary. So there are multiple ways to really expand that income coming in. But I do honestly believe the hardest step is those first few setups that you've got to make. And there's a good saying that I like. You can either have 10 years of pain now. You can either have 5 years of pain now for 10 years of pleasure, or you can have 5 years of pleasure for 10 years of pain. So, yeah, I really do believe that the goal right now is to get that first buy-to-let under my belt. That's really going to give me a significant amount of income back into my revenue, building my asset column, because that's essentially all I'm doing. I'm trying to build my asset column and reduce my liabilities column. So in the future, yeah, I'll probably definitely sell my Nissan, the Nismo that most of you know I have. I love it to bits, but I'm completely aware of the fact that it's a liability. Yes, it might go up in value, but in that time I've definitely lost money through fuel, through tax, through cars, all sorts of things. So I know it's a liability, but right now I'm happy to have that, because I do believe in a balance between investing, saving, working, and having enjoyment. But when the time comes that I'm really experienced, maybe I've got a couple of buy-to-let properties under my belt, I'm feeling confident, I'll probably just sell that and relinquish another, say, 25 grand, maybe 30 grand, and put that money into another property. So I'm really seeing a slow start for my progression to becoming a entrepreneur, if you like, and retiring early. But as the time goes on, I'm scaling it up because of compound interest on all of my investments into these assets, being predominantly property, to give me that passive income. So I know that's quite a lot to take in, but if you really sit down and think about it, it is entirely achievable. Other people have done it, so why can't you and why can't I? I completely believe in it. You've just got to have the self-discipline to accumulate that money, and then you've got to have the courage to put that money to risk and put it into a property. Maybe you'll get a bad tenant, maybe you won't. Maybe you've got a problem with the property, maybe you haven't. But if you don't take risks, you're not going to get any rewards. So you'll find that most successful, if not all successful people, have taken those risks, and the ones that have come up successful just keep repeating that method. So that's entirely what I'm focusing on right now, and I honestly, genuinely believe the scaling of that I can retire in 20 years. And when I say retire, I mean, I can, have plenty of money coming in a month that I don't need to work. I don't need to be employed by anyone. I don't need to be self-employed. I can just let that passive income from the property pay me every single month, so I can take a step back. And that really is the simple plan of it. It's nothing crazy. There's no secret to this success that I'm planning on. It is simple logic. Save that income, build up the capital to invest into property to get that passive income. Use that passive income to buy myself more precious metals such as gold bullion predominantly and some silver to hedge against that inflation and protect the wealth as I'm going along, making extra passive income. So I really do see that as a possible and viable future for me. But like I said, this first 2 to 5 years for me is going to be the hardest point, because that is the point where I'm going to have in my life the least money per month coming in. But as time goes on, I'm expecting that money to increase month by month, year by year, therefore making it easier and quicker for me. So the first initial part of my journey is the longest and the slowest, but as time goes on and progresses, I really see it expanding very, very quickly. So the more I get, the more I can invest and reinvest. So yeah, that's my plan. I know it sounds off the cuff, but like I said, this video is done straight after I come home from work. I'm very excited and always enjoying making content for you guys. So I wanted to come in and give you a real honest, raw example of how I plan to retire in the next 20 to 19 years at around 46 years old, at the latest 50. And, I didn't want to butter it up. I didn't want to script this video and get all clever and formulate the exact words and everything. I wanted to be honest and come at you with a real honest opinion of how I plan to do that. And so you guys can see the uncut version of how my mindset thinks. And that is literally it. I'm confident in this plan. I'm confident in myself to achieve this. And I think it is entirely possible. I'm not even including other things that come into play that can help me achieve this even quicker. I'm just doing it almost off of a worst case scenario. So I think that's the best way to look at it. But yeah, I'm looking forward to this journey. I'm looking forward to protecting my wealth with much more gold bullion and silver as a slightly more to an investment side of it. But yeah, really, really excited to get this first buy-to-let property under my belt. I'm looking at January, February 2025 to be purchasing that. It could come sooner, it could come a bit later. It all depends on how hard I push. So yeah, that's my journey, that's my plan, how I plan to retire early. Hope you've enjoyed this episode. Thank you to the channel members. I appreciate all of you. We've got 5 channel members now. That's absolutely insane. Keep the name suggestions coming for our new dragon mascot for the channel. He's a really cool little feature that I'm pleased with. And you may have noticed this new piece up at the back here. This is a Prince Charles and Diana proof silver bullion coin from the Stack Collector that he sent me for my birthday. So a lovely piece that is a new addition to the backdrop. So thanks very much for watching, as always, team. And until next time, I'll see you in the very next episode. Bye-bye, guys. To watch another episode on future investments, click the link now.